Hey everyone, GigaCloud technology stock is an interesting one to consider. In this video, I'm going to answer where I think the stock price could be by the end of the year. I'm going to use several assumptions and estimates to make this stock price prediction. So follow along and I'll share with you exactly where I'm getting the numbers to make this stock price prediction.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so one of the things I'm going to need is GigaCloud's current share price. Right now, as of this recording, it's trading at $33.80 per share. I'm also going to need GigaCloud's price to earnings forward ratio. As of this recording, that forward PE is 9.628. You can see the forward PE drifting upward in the last year. I suspect this will continue drifting upward as I think the valuation is really relatively cheap here, and considering its characteristics, I think it deserves to trade at a more premium valuation than where it is today. So I'm also going to need GigaCloud's next year earnings per share estimate, and according to the Wall Street analysts that are following GigaCloud stock, they think it's going to deliver $3.51 in earnings per share in 2025. You can see that's up from just 30 days ago where they thought it was going to deliver $3 per share in 2025, and that was up from 90 days ago where they thought GigaCloud's going to deliver $2.85 per share. So expectations are increasing for GigaCloud technology as its prospects are improving, and also it made two recent acquisitions, and it's thought that maybe those acquisitions will be accretive to its profitability in 2025. I mentioned those acquisitions, and one of which was Noble House Furnishings. The company purchased Noble House Furnishings for approximately $77.6 million, all in cash, which is impressive considering that it's a relatively smaller company, but it generates sufficient cash flow to make an acquisition of this size. Its net cash flow from operations were $133 million in 2023. That's compared to just $49 million in 2022. So it more than doubled its net cash flow from operations year over year. And it used some of those funds to make two acquisitions, the larger of which was Noble House Home Furnishings, which it acquired for all cash for $77.6 million. Now, I say that when a company makes an acquisition for all cash instead of using stock, it signals to the market that the company feels its shares are undervalued. So it's not using its shares as currency. In fact, GigaCloud is buying back its shares, which again sends a signal that the management team thinks that its shares are undervalued. Now, I find this to be a strong signal because the company is using millions of dollars to back that up. It's not just empty rhetoric where the company's CEO goes out and starts talking and hyping up the company's stock price. That's not valuable to me when I see that happening. In fact, I see that as the opposite. When I see company management teams going out and just hyping up the share price without going out and spending money buying back the stock, I tend to be very skeptical of that situation, and I pointed that out recently with a few companies that I was following, namely Fisker. If you remember, Fisker is a smaller electric vehicle company. Its share price started to get under pressure a few months ago, and the CEO started coming out and talking about how he felt the share price was undervalued and that the market wasn't giving it the appropriate valuation, and on and on. But all the time, the company's share price continued crashing, and it's now down to pennies on the dollar, and the company's in danger of going out of business. The company was not buying back its shares while the CEO was talking that. I know that was just one example, but broadly speaking, when a company's management team is spending millions of dollars buying back its stock or using 77 million of cash to make an acquisition instead of using its stock to make an acquisition, it sends a strong signal, one that is not easily faked. All right, so now that I have the numbers to make this stock price prediction, we can begin our model. The $3.51 in earnings per share for 2025, I got from Yahoo Finance. You saw where I got that number from. The forward price to earnings multiple I got from Y charts, and you saw the forward price to earnings moving upwards over the last year. So if its earnings per share goes as expected and its forward PE stays where it is, then the stock price could be $33.70 to end the year. Now it's at $33.80 right now, very close to where the end of year price target would be. However, I don't think that's the most likely scenario. I think the most likely scenario is the forward PE moving upward because of the characteristics of the business I mentioned earlier. I already showed you the cash flow from operations year over year more than doubling. If we look back a little bit longer, you can see the cash flow from operations to sales and operating profit margin, both solid 16.23% and 18.96% respectively, and moving upward. A company with this type of characteristic, this type of revenue growth, profit margin, and cash flow from operation, typically these types of companies trade at higher valuations. And when you find one that's not trading at a higher valuation, it's usually an opportunity, which I agree with here with GigaCloud stock. I think it's an opportunity. I have the stock rated as a buy because of these characteristics and the relatively cheap valuation. So if the forward PE were to increase to 12, then the stock price could increase to $42 per share. If the forward PE were to increase to 15, then the stock price could rise to $52 per share. But if things worsen and the company's not able to digest this acquisition as expected, and it actually leads to falling earnings per share instead of growing earnings per share, then the PE multiple will likely fall. If it falls to 7, then the stock price could fall to $24.57. So given all of these scenarios, which one of these do I think it's most likely? I think the scenario with the forward PE between 10 and 12 is most likely, and I think a stock price between $37 per share and $40 per share is where I see the most probable outcome for GigaCloud Technology stock in 2024. So all of these things being considered, especially looking at the current share price of $33.80, there's a potential upside of $3 to $6 for GigaCloud Technology stock, which will be somewhere between a 10 and 20% rate of return for investors, which I would feel is an excellent rate of return for a little more than 9 months, or roughly 9 months of a year. And considering the risk profile of this business, I think the risk versus reward is worthwhile for GigaCloud Technology stock. But I'd be interested to hear what you think about this company. I'd be curious to hear what you think about this analysis. So let me know in the comments section, and I'll be reading those closely. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.